right, welcome everybody to the stream. Who's pumped for another week in the US stock markets and, of course, markets around the world? I know I kind of feel I am. After all of the shenanigans last week, I'm sure we're going to get some pretty decent opportunities. So hopefully you guys are along for the ride. How's everybody doing out there? Did you all have a good weekend? I hope you did. And I'm sure most of you did. So let's begin by talking about the stock market. As always, we'll cover a few things in today's show. We'll go through our thoughts quickly on the stock market, go through some lead indicators, then we'll get into some metals, some cryptocurrency, and of course, currencies in general, because guess what? Currencies are actually where the trades are at the moment, especially metals. And then we'll get back into the market as we lead into the open. So much going on. Let's begin by discussing the new pivots. We have new pivots, guys. So last month, we managed to reach the R1. And the R1 here was the green line. So I'll zoom that in so everybody can see it. Welcome, welcome. Thank you very much as well to everybody that's coming in. We're almost at 100,000, which is a result I thought never achievable for a niche channel like this, where we talk about super in-depth, crazy technical analysis and everything else to do with the macro charts. So yeah, thanks to you guys supporting the channel. We're getting very close, and that's really thanks to the community and how strong it is. Jump into the Discord as well, public Discord, smashing it, major contributors, sharing tons of information. And of course, we have the private one as well. But you know what? It's just it's a massive community, and that's the best thing about this, what we've built. So let's discuss here US 500 R1 pivot, green line. So we hit that. Now we do know that R1 pivots are, sometimes a good area. We've seen it before in markets when they've picked up. We saw these R1 pivots through 2020 into 21 really treat us fairly well with good take profit targets for the week, for the month. And just really kind of, when we hit those levels, we often saw sell-off events. Now we've got a new one. So it's kind of like that last time over here where you've got like the movement, and then you get a new one, you get near that top, and then that begins the end. It's just one of those areas that you might want to have on the charts. Now we've opened it at a pretty high level, and a lot of you are going to say, nah, it's not going up there. We can't get up there. Hey, look, we're in an interesting rally here, and we're going to talk about the key levels, because a lot of you and a lot of people I've been talking to seem convinced that the bear market is over and it's all rally, all good. Luckily, we've been following the price action. And guess what? We're going to leave our opinions partial. I'll give you my opinion anyway, but we're still going to leave them partially at the door and trade accordingly based on the technical analysis, based on what we're actually seeing the psychology of the market's doing. That's what's all about. Patience, react, don't predict. If I was trying to pick the bottom, the only way I could have done so was through technical analysis and really macro data. There's not much else I could have done. So let's break it down. We've got the monthly R1 opening very high. We've obviously got that huge trend line that's coming through that will probably be the end of really the bear market should it get reached. We have a big one on the Nasdaq as well. So I'll load up the Nasdaq chart so you guys can all see this. Let's load up the Nasdaq and put the trend line on. Well worth having this one on your charts, guys. So here's the Nasdaq. And you can see here the trend line that's coming through. And this is one of the charts that I want to discuss going into the S&P. First up, we have the two pullbacks. So right now, we are kind of having a bit of a rip rally. People can't believe what's happening. People cannot believe how strong this market has been getting. Where does it stop? Well, a lot of this is about risk reward. What is the reward before it potentially stops? Could it go all the way to the moon? Unlikely. These are stock markets. They don't usually rip forever. They usually rip into key levels and then they end up stopping. Now, this could be a key level we're at, so you have to pay a lot of attention here. But we've also got some more coming up within the next 2 to 3% for the Nasdaq. This is the downward trend line that goes through the peak of the market into the March rally, into where we are, into also support, becoming resistance, and a 50 fib of the pullback. And they look very similar. Think about the rallies that we've seen. The rallies actually look fairly similar. We had a bottoming, we breached. We had a bottoming, and of course, at this moment, we've breached. Now, not with the ferocity. The faster and the harder this goes up, the more likely we have the pullback coming. Because, of course, the faster something goes up, the more it traps people into that mentality. So, of course, are we still bullish? Yes, the price action is still showing us bullishness on this market. And we'll explain that soon. But we've got some key levels here. 50 fib sits in the line for anyone watching in the car. A few of you messaged me, you do that. Hopefully you've got your eyes on the road. 13,150 is that kind of key big level. And then if we hit the trend line, we could go as high as 13.3. So these are kind of some levels for the week ahead. Obviously, that one's what a lot of people are looking at as well, the 13.5. Somewhere in here, and I know that's not very specific, but somewhere in here, I expect this market to stop itself. Somewhere leading into between this 50 and the 61.8. That would be what I expect. Let's go back over to the SPY here so we can start to define the levels better. So SPY, you guys know this one, 41, I think it is 76-ish on the real market. And on the futures, we hit a 4,200. And this is now what most people are probably looking at. Now, if we go back to the markets before, let's just quickly do some fib and let's talk about Fibonacci pullbacks on this one. So we'll go here, the fib from here to here, over 61.8. So just over 61.8, goes past the previous resistance highs. Look familiar? Market comes down, market goes up, market makes a new low. A, so Elliott wave style, A, B, impulse C, okay? Aggressive C. Let's now bring it over to where we are. Market goes down, market comes up, market comes down. A, B, potentially C. So we're probably, if we are in a bear market still, it can't just go like this. No. That's not what you want. If that happens, you gotta. That's not normal. Okay, that actually probably means that the market's looking a lot better in terms of recovery. It should impulse and then sell. Okay, that's what you would expect if we were in the bear market. So let's get that fib. Let's pull that over. So last time we went past the 61.8. This time around, we got a monster pullback. So monster. This is again 50 fib to the 61.8. Now imagine if we breached the previous high. Where's that sitting? Around that 4,200. We come up, we get close. Remember where the R1 is, guys. That's why I put it on the charts here. 61.8 fib and the R1. Somewhere in here makes a lot of sense to a lot of people between that 41.76 zone or 41.50 and really that 42 kind of 70 zone. This area here makes the most sense for where if the market does want to go short, the more extended it gets, the more likely you're looking for that turnaround in the price action. Don't just predict it though. It's better to see it happen on the chart. So let's actually get in there for this week and talk about it. We'll read some chats coming through. Good to see some of the mods back. Good to have you back, Dave, and many others. Thank you very much. Monica N said, Tom did call the bottom based on sentiment. Hey, I don't know it's the bottom. I just knew that everyone was too bearish. $77 coming in with a $4 super sticker coffee. Thank you very much, Sandollar. Always appreciate you on the streams. I only figured out the other day what that $100 stone thing is, by the way. I've got to say, when I'm coming over to America next year, anyone that knows people that knows for mineral samples, I'm interested. Okay. I think it's like modern day art, guys. Modern day arts. I love the mineral samples. I don't know why. Bit weird like that. So let's move over here to these markets and let's look at these key levels. So first up, we've got some little dojis in here and we've got that previous support. So what was formed by that? This is what happened on Friday. We've got that 40.80 to 40.70 zone. So I've got that one highlighted because I think that's kind of where you start to turn this market to the downside. And you say, once you breach through that, while you may have a pullback past that point, you're most likely then returning back to the 4,000. And you can see here, 39.90 kind of area. I've got that zone as the next level. So if you're feeling bearish, generally the morning it would go down, like as in like it would come into this level. And you don't know whether the buyers are going to come back in and show commitment here. You just don't know that yet. You might say, well, in the future, in 2 weeks' time, in 1 week's time, I think it's going lower. Sure, it's a guess. So at this point, there should be buyers here, theoretically. If there aren't, and they fail, and the market pulls through, then the pullback should be met by sell demand because it broke through this level. It wants to then move down to this more key zone. And these are the 2 minute, I call them mini zones. We'll go with mini sups or mini levels. For us this week, they're the kind of mini levels. With the mini level 40.80, 40.70, Hopefully that's helpful. And we've got this other mini level with these wicks between 4,000 and 39.90, I guess. I think around there is fair. Got some wicks that came off it. This was after the announcement. Obviously, we saw it come back to this level. Somebody probably put a whole bunch of gunpowder under that one, and they blasted it off. This thing was it was a SpaceX rocket to the moon. Though I must admit, I heard SpaceX dropped some debris in Australia today or yesterday or something. We've got money. We've got it basically coming down to this level. Then if the buyers don't show commitment there, the big kahuna. I call this the kahuna. This is the kahuna, guys. We need to pay attention to the kahuna. Why is it a kahuna? Because we have resistances, we have supports, and we just have an overall large level. So this brings in the idea of demand, the idea of supply previously, the idea of support and resistance. I like bringing all the mixture together. And really that comes in around that 39.10, 39.20 zone. If that breaches below, watch out, because at that point, rallies should be met by sell demand. And I truly believe that this market will go quite a lot lower. We're talking 38, maybe even back to the 37.50. So this is the kahuna level. I expect the biggest amount of buyers to probably be showing themselves around there. These are the mini levels, and mini levels are what day traders look for. So for today, I wouldn't blame people for potentially being a little bit bearish. Big session last week. Market, of course, shows itself here as being a little bit overextended. It's outside of Bollingers and stuff like that. Maybe we'll add a little Bollinger on here. Let's get a Bollinger. And we use this one. For anyone that doesn't use Bollingers, they can be helpful to show you those extreme moves. And as you go out through the Bollingers, you'll see that a few of them, we spiked that 4 hour quite a lot recently. No mean reversion. What would happen? Market would come down, 20 moving average would come up. We'd be sitting in this zone. So you can see why the buyers could be there. Okay. That I don't think this has changed trend yet. There's no reason to say it has. You're guessing at this point that you believe it's overpriced. What do you guys think in the chat, though? Let me know. Thank you also to the 840 people joining us. Could we hit 100K in this stream? Invite your friends and get them to sub for no apparent reason. Say, hey, this technical, they draw squiggles. It's like Mr. Squiggle. Come over to the Mr. Squiggle stream. If we got to 100K, that'd be wild. But yeah, thank you very much, Sandola, and also to the 818 or 840 people watching us right now. So yeah, Bollinger is a great starting point for a lot of traders. It's something that shows you extreme levels. So obviously you get outside the standard deviation of this 20 moving average. And then what you're really doing here is you're showing that extreme FOMO or extreme fear. Usually when a Bollinger exceeds for too much and exceeds too many timeframes, it likes to pull itself back down. So that's where you get that kind of nice mean reversion strategy. And a lot of people like to buy off that, or they like to buy the opposite side of the Bollinger. Look, they're relevant. I mean, Bollingers with RSIs. I mean, in our course, we talk about Bollinger, RSI, stochastic, and then, of course, MACD. Probably my favorite or some of my favorite indicators along with moving average. And VWAP would be another one as well that I would bring into the fray. So, yeah, here we are. We're kind of a little bit extended. I think it's hard-pressed to say that you're bearish in the market yet. We don't go underneath here yet. We're looking for potential turnarounds still here. If it does breach, then of course the next level, I believe, will be somewhere around down here. So there's some good short strategies. We're just not seeing it quite in this market open just yet. Let's look at some of the other factors now that we've talked about the US 500, the Nasdaq a little bit. Let's move over to some of the key lead indicators that we've got going on. Strange stuff at the dollar. So let's go have a look at the supposed cash is, actually we'll use a different chart. We'll use the cash is king US. No, I like that chart as well. I want to have that for later. We'll use this one. So we'll go over here to DXY. So basically the US dollar, it's weakening. Now we kind of had a guess on this one a little while ago. Thank you, Sandola, that this was most likely going to go bearish. And the main reason was, it's actually two things. I saw money flow slowly come out of it. Now, remember, always think of it like this, guys. When everyone talks about something, it's called like elevator theory. If you're in an elevator and someone's like, cash is king, bro. Another guy's like, yeah, I'm just holding cash. I love cash. you better watch out, because if if that's happening in the elevator, that probably means way too many people think about those. I just remember very, very like a huge remembrance for back about 2013, 14. I think it was 14. I was in an elevator and everyone in someone they were talking about bank stocks and how bank stocks were great. Anyway, in Australia, that was like the peak of the bank stocks, and they got crushed about a week or two later. And they were literally talking about bank stocks. Who would ever think someone would care to talk about bank stocks in the elevator? So yeah, that theory does hold true. When everyone believes something, it can be kind of the false narrative that you want it, that the spread of the idea has been too extreme. So here we have our orders. We have, of course, the chop. We have what I call the SST, super sneaky style trap, which is also in Wyckoff kind of concept here, potentially a UT or an upward thrust. And this basically becomes what we call a distribution. So effectively, the market was resetting indicators, trapping people into positions, doing all sorts of things. And then it broke down, rallied back up, and then broke down, then rallied back up, giving two pretty exceptional trades. A few people in our private community would have known. And if you join our private community 7-day free trial, you can actually see that one there. I do it live. So that one was particularly good. Now, obviously, it's not signal service, but it was just showing the technical setup was setting up at that time. And that's sometimes it happens, sometimes it doesn't. But it was a pretty cool one. So the US dollar seems to be weakening. We're at what you would call technical role reversal. Obviously, a new low here should weaken the US dollar a little bit further. We've got some problems leading into it, but we do have some key levels moving forward. And as we come down here, what that's showing you is potentially money flowing out of, let's say, cash is king, and going into things like maybe growth in other countries, could be Europe, could be catch-up plays. We'll show you the DAX in a minute. It's playing a bit of catch-up to the SPY, and it could also be bonds. So the US dollar is weakening at this stage. And it seems like that money is going to other currencies. Just to name a few, if we go over here, we've got the euro, obviously about to try to do a breakout here. Euro, one of the weaker ones, but this is a huge level if it can break out. And then we've got pound already at a new peak over here, going to contend with these highs. We've got the Australian dollar, where I'm from, getting a little bit stronger. It's a pretty crappy dollar most of the time, but it's improving. You know, maybe I can come and afford one Chick-fil-A burger in the future in America. 70 cents. It's only going to cost me $500 for a Chick-fil-A burger, but it's getting a little bit better. So yeah, well, that's moving up, and really it's also helping, of course, the silver and the gold trades. And we see here the yen fully reversing at the same time. This is kind of, again, look at the yen. Look at the yen here for this year so far. Oh, terrible. That's the yen index. Everybody hates yen, but then all of a sudden that risk is coming back in, the appetite to this market. So yeah, the dollar, I think, is for currency traders, we don't always talk about it, but sometimes it fires up, and it certainly is in this case. Now, could that mean that the bottom is in? Nah, not necessarily. It just means that we're getting at least a little bit of relief on what was a vertical drop on some of these things. So very harsh dropping. Let's move over to copper. Copper, of course, still finding some buy action. Probably should weaken here. We're in our first box take profit, 355 kind of zone. Nice to see copper base. We've been talking about it a little bit. Fib would be worthwhile bringing onto this one. Again, copper going up can show signs of strength. I personally just think that also when you look at this chart, it was so oversold that it needs to pull up. So 38.2 and 50 fibs. Notice the 50 fib just around there. We've got probably some little bit of resistance and issues that copper might have to contend with. So just like iron ore and others, this could all be part of a relief that ends up failing moving forward. US 2-year, US 10-year, both of these are looking a little different. So obviously we have the 10-year here. Again, whether it helps us or not, I do believe that inflation peak is in. Okay, just my opinion out there. I'm going to give you my full rundown very soon on what I'm thinking in these markets. But I do think the peak of inflation is in. That doesn't mean that the hurt of inflation isn't there. So it's not going to just drop to 2% and go, oh, we've magically fixed ourselves. We've still got X factors we'll discuss soon. So the US 10-year is still showing a sickness. It broke to the low, which to me just really shows that there is recession-like tendencies in the US market. Now, they changed the definition of recession, but what that's really meaning is that the short date, which is 2.9, and the long date, which is 2.68, the market still believes that there's a cut coming, and I'll show you what the cut looks like. So let me just show you here the cut. Interest rates, we'll just go to some December. So December, we're still at 3.26 by the end of the year. But where things really changed is this one, these ones that go into 23. We were at 4.12%. Can you imagine? 4.12%. Now we're sitting at 3.27. So it's more like this, the way that I see rates at the moment in this market. Like that, kind of like small drops. So it's completely changed, and then eventually it hits 2.6 in 2024. So the drops, it's more standard rate for longer now. It was initially more hike, followed by faster drops. Now it's more hike, hold to try to stop inflation, scare everybody, and then slowly drops. I mean, that's not my opinion. That's the opinion of the market. That's what they're telling us. Does that help us? It depends what asset class you like. Mohammed says, Tom, the Japanese 10-year has shown some serious breakout in the monthly chart and looks like new highs are coming. Do you think the Japanese central bank will really be able to hold yields low? So the JP was at 10, was it? I can't remember the code on it now. Chen-wide government bond yield. The bond yield's the main problem. This yielding, they want to keep that low. So where they were fighting with it was here. That's where they were fighting with it, trying to keep the yieldings low. So this is helping them really. That's why the yen is releasing itself. So the yen is actually showing the signs of strength, because in essence, the market is now telling us we've hit peak inflation. I mean, the market said that since June. We've obviously early said it in May, been a little early, I would say, maybe a little early, and then we called it again. We're going to put that in, and I do think we hit peak inflation. However, that doesn't mean the problems are gone. So let's just discuss the problems, because we need to look at the positives and negatives. And guys in the chat, everybody in the chat, if you have positives and negatives to the economy, put them in now, because we might as well discuss them. So I see the big negatives moving forward I still think that we've got supply, okay? And I still think that the market won't like China lockdowns. Let's say they come. I think it's inevitable and it's going to happen. We also have midterm. No one's talking about it. I find that strange. But we do have midterm. Technically, that's actually what causes the volatility most of the time. So midterm elections. Funnily enough, no one talks about it. Then this is more the neg side, yeah? So the negative side. Then we have the next thing, which would be seasonality. We know, and I posted this on the Twitter, that we have a weak months coming up. August, September, October, historically weak, historically volatile during midterm election years. This is just to name a few things right now. We still don't actually really know whether the Fed's going to pivot. So we'll call it over here. We'll call the Fed a slight positive. Okay, we'll go with the Fed as a positive. I don't know if it's a positive or not, but we'll go with that because that seems to be the current rhetoric. We also don't have, I think a negative as well, is the catalysts are getting less. So what was a big catalyst? Well, the catalyst was earnings. We've now seen Apple. We've now seen Amazon. We've now seen Microsoft and Google, and everything's all, so great. We've got crappy earnings, but it's so great, guys. We expected worse. So the catalysts of bullishness are starting to lessen. They're starting to lessen. Cost of living. Yeah, exactly. Cost of living is up, which should mean, but again, we don't know what the market's already allocated. So the market's forward thinking. Market's like 12 months, 18 months ahead most of the time. So cost of living, probably too difficult for us to work out whether they've already done the calc on it. That would mean, of course, reduced purchasing power. So purchasing power should go down. I was on the bank call today with a bigger bank, and I was talking to them, and they've just changed. This is in Australia only, but they've just changed the way that they're now assessing home loans. So it's gone up. They've just randomly made it way higher. another 2.5%, which obviously will affect people's variable loans, which is, big thing here in Australia, less so in America because you guys have fixed. But yeah, purchasing power will go down. And these are just some of them. I mean, we could probably write a huge list, but we want to just keep it simple. So there's some big negatives there. On the positive side, we have possibility of interest rate. Well, we have interest rates probably have spiked soon to their highest point. So the market's already ahead. Abe says the Fed did not pivot. Yeah, I know the Fed didn't pivot. I'm just putting the Fed there as we're giving a little bit of positive. Yeah. We're going to go oil under 100, which could be seen as good or bad. Again, that's there. We've got the DXY randomly going down. So maybe that could be good. Ulrich says the labor employment is too high. Higher wages, et cetera, is unhealthy. More of a stagflation concept. Yep. What else we got here? What about China stimulus? Okay, we can say that is Stimpaks. Could be positive. So Stimpaks. Maybe we'll get them. Remember, the Fed is unable to Stimpak the market. Mark also says, remember, Tom, the Fed is always late and wrong. That is correct. If you actually look at charts, good charts in the economics room in Discord between what the market ends up doing with interest rates and then what the Fed ends up doing. And the Fed is usually wrong. Oh, and yeah, I forgot about that. VIX. Exactly, guys. We're going to bring the VIX in here. So there's lots of negatives, few positives. I'm sure there's more positives. You're all going to disagree with me in the comment section later. Hey, I've just written some down. The way I really look at it is it's not even about this so much. It's about human emotion. Think of the market as kind of like Wyckoff wasn't wrong when he said that's the composite man. It's emotion. We stuff it up. So you've got to think how many people, when you're trading even technically, if you're going against the crowd, let me just give you a hint. Put a smile on your dial, especially if the technicals continue to tell you to do that and everyone else is against you. If the technical says short and everyone doesn't think it's short, hey, you're probably the one you're probably doing a really good job. But that's actually a very simple way of looking at it. But yeah, all of these things can confuse you. The best thing to do is just to say, okay, well, let's cut that down. And let's just say, okay, right now, what is everybody in the room? What's the one word that you would describe currently starting to come up? What are you all feeling? You all feeling a bit bad? If I was to describe the market right now, I would say it has a touch of a word. US steel? Yeah. Well, I always look at iron ore price. So I like bringing up my sweet iron ore. Oh, not that one. Hopium, optimism, FOMO, short-term bearish. Yeah, I think a little bit too many people are still thinking that the markets are going to a few too many people were thinking bull trap for a little bit too long. So the problem is we obviously said follow the price action. That's what we're doing. We're following the price action. We haven't seen the negativity yet. We've just seen pullbacks that are still been in the bullish trend. I still think there is a pullback coming. It won't just vertically rock this one. There's too much uncertainty still. But to pick bottoms, guys, be careful. If you're going to be an investor, frankly, you've just got to have some kind of strategy around dollar cost averaging. There's iron ore. There's our metals discussion from last week. That's actually the trend line there. So iron ore just sitting there. All right, let's go over some other markets. Let's discuss here the VIX. I want to go the VIX. VIX, 22.79. So for bears, they're looking at it and they're saying, well, every time we get down to this 20, we seem to drop off. True. The 20 has been quite good for picking that this year. Once you've got to the 20, you've generally been close. I mean, here we're on 29th of March. We all know what happens after that. Here we've got the 9th of Feb. Yeah, that was a pretty good time. And here we're getting close to it, 1st of August or 29th of July. So 29th of July, for VIX traders, they're probably looking at it saying, well, it could get down here. It could go lower. But this is around that point where, I could play the game for a month and say, well, I think VIX is going to be higher than it is right now. What's the risk reward? Is it worth you starting to scale in? A lot of people that retail traders, we often don't scale in. It's all or nothing. Do we have any all or nothing traders out there? All or nothing? Matias says he has shorted the NQ, bought the ES. Damn you, Tesla. Oh. Tesla's hurting you. You look at the ES, it's going down 4,100. We'll look at it very soon. I know it's a bit red here. It's going in. Pieta, I think it is, said, I recently started scaling. How's it going? All or nothing here. TR Kobe says, all or nothing. And Pierre says here, scaling helps so much, honestly. It really does. It really does. What is scaling, a few people saying? Scaling is basically where you pick a zone. So you might pick a box or an area of interest, or you might have an idea. And most big traders, actually, in fact, all large traders position in. So what that means is they position in and they position out. Let's say they have this as a box. They say, okay, if the VIX hits 20, what did it hit? 21 and a bit, or 21, I will take a first initial entry, let's say 1/3 position. Then the market comes down to where you want to take it, and you might say, okay, I take 2/3 position where I was going to take it anyway. It allows you and your mentality to get into a position, yet if it comes against you to your correct level, you can have a little bit more. Now, that doesn't mean, oh, wait, no, I'm going to take a 4/3 down here and I'm going to take like 6/3 down here, guys. You know, I'm dollar cost average again. I'm martingale strategy this thing. But it does mean you can do that. And then what that helps you do is it helps you feel like you're positioned, at least partially, so you don't feel fear each way. So say like the US 500, if you were thinking of doing that, let's just say, and you had an idea, maybe your concept is, okay, I'm looking for the S&P 500. You might say, well, when the S&P 500 hit the 20 moving average and the week and the monthly R1, 41, 20 or 41.10 or whatever, I think that I would place, I don't know, 1/4 short. Now, if it comes up to this level, are you going to cry about your 1/4 short? Well, it depends where you have the stop loss or what your plan was. But that's what it is, scaling in and scaling out. And if you believe that you take profits down here or it's down here, maybe you want to take some early and scale in and scale out. It's just a better way of doing things. Jim says here, but you're all set up to take a full loss when you're wrong. Two different ways to do scale ins. You can also scale in where, if you prefer, you let it hit your level, and then as it bounces and shows you that it's actually going in the direction, then you place the secondary position. It just depends. Depends whether you're more of an itchy fingers trader and you have to be in, or whether you're more of a methodical trader that prefers to say, okay, I'm going to place a position to get myself in, and then once it goes in my direction, I add to it. There's nothing wrong, but they are two different types of psychology trades. All right, let's get into some further stuff. Let's talk about some other markets here. Go back over the US 500 just because I've seen it's dropping a little bit here. So we'll load up the futures. Oh, oil is getting smoked. Yeah, this was a really tough chart, I've got to say. I actually thought oil would hold here. So my idea was to bull oil through this, and obviously stop losses under here, and that's gone. It's gone. Like if I was with oil, I'll say this: I'm very, very short in concept on oil, but in terms of scalping and day trading and all of that, this was looking towards the bull side. That's why it's important you have risk management, because this thing now looks like it's about to rip it like down, because this has basically been playing with this level for a while. So see how it induces that final position, and now it looks like it's actually going to go through. Now, I suspect, based on forward contracts, oil is already pricing itself at like 80 a barrel by the end of the year, and 84 a barrel at the end of the year. So this is the kind of price that oil is getting to in the future. This is spot right now. So again, destruction partially of the economy, probably this is a huge thing to do with yields. Oil hates yields. So if yields are coming down, which they are, because now, of course, we're curving in the future, it's bad for oil traders. And considering how many people were bullish on oil, it's, this is a big level. So we'll find out what happens in the morning. That's going to be pretty brutal. Giorgio says, another question, crude oil seems to change to a bull trend. Oh, I don't know about bull trend right now. That doesn't look bull trend to me. It looks kind of terrifying. I don't like oil at the moment because it's geopolitical. I think the best way to trade oil is options and really having your risk in line, because it's just such a scary one. The one I've loved at the moment is gold. Gold has been very, very nice. I like gold, but I think you're all aware of that. And people hate the gold. They message me and they say, Tom, stop talking about gold. Well, what I say, 1% of the time, guys, 1%, gold's okay. So here's the market here this morning. It's dropping off, and I think it's very fair for it to do so. I could see it coming into this 40, 80, 40 kind of 70 zone. Remember, it's still technically uptrend in terms of the higher time frames. So you've got to really say, okay, this is really where you hope that turn comes, and you're trying to react to the turn and not necessarily predict it's going to. It could also just fall straight through. Then on the pullbacks, we believe at this stage, these are technical zones that it could move to. That would basically say a technical break has happened. Recoveries should be shorted. A few people say here, but Clive says, I bought DRIP and GLD. Yeah. Ryan Kong says, do you ever do Aussie markets? I do. I'm actually going to introduce, maybe for the month, we'll do ASX on the daily show. Yes, I said it, ASX. We do the DAX already, so we might as well do ASX. Just quickly, just a little for the Australian viewers. We'll do a little bit of ASX. So here we've got the US 500, that key zone. Again, if you want it, it's kind of, if you want to perfect it, you'd be saying between that and the center of these. So about there, I'd say. That's a good little box zone to look at. DE, this is the DAX. Take a look at the DAX. Still very strong. Haven't really changed anything here. My opinion still really holds that it looks like at this stage that the DAX should be able to go and fill the gap that it left over here. So I'm not sure on DAX gap fill probabilities or anything like that, but it's taken every single short that was here, all these wicks, all these poor people saying, oh, look, it's a shooting star, we're going to short it down. Just hear out this thing. Shooting stars are like statistically like 53%, if not even worse. So they're not that good by themselves. You have to have more reasons. I actually like countering them. So when you get breaches through, there often is a good counter trade that comes through. Yeah. So the DAX here, you'd be looking up until this level. Do you want to trade the DAX? Yeah, well, I like America. The American market's probably the best market. Well, it's not even a question. It is the best market. And then the DAX has a lot of geopolitical risk in it as well, which is why it's quite low. But as a technical, it's broken through. It's gone above these resistance highs. Potentially there's a movement here. Jacob Johnson says, 2 weeks ago, I started buying GDX and GOAU plus FSM again after selling them 3.5 months ago at way higher prices. Congratulations. That's very cool. Let's have a look at gold. It's getting golden here. Okay, so it's ramping. Now, what will happen is most likely this will ramp a little. This will ramp as long as DXY is falling, okay? DXY will then most likely hit a sup, and then we will see gold maybe start to suffer. Now, I don't think you have to chase gold. It's well known to go on little ramps and then do little pullbacks, or actually not little pullbacks, big pullbacks. I've got kind of this red zone here that I've highlighted previous kind of pullbacks that have occurred off the bases. Now, obviously, these had some big runs in them, but this would be a pretty logical kind of concept. Bit of pull up, movement down, gets back down to effectively what was the backwards trend line, the trend line it got down to, I guess. And then, yeah, we move off that kind of level. So we've got a few boxes here of interest. Buying gold here, pretty questionable. I don't see why you would do that. I don't even, I just, all I know is the money flow stopped being short. Okay. That's all I know. Money flow stopped being short and gold had some mega trades on it. You can see I've got a highlight here. I was showing someone in private. This was a serious zone. That is a super sneaky position. Certainly max pain creation. You can see that explosive move that's come off this. And now people will start to talk about gold. And usually once they start talking about it, that's when you're looking for that turnaround story. So at the moment, series of high lows. Obviously, it's got a trend line here, looks like. I could even see a short on this moving forward, small time frame. But at this stage, it's basically just making those higher highs and higher lows. There's no real reason to doubt it. We're at the next kind of order issue. So I would like to see it kind of like breach, pull back, pick up, maybe even take a short here, and then get back into that zone or even this box here. Both of these levels, 1750 or 1730, certainly interesting. Unemployment is the last indicator to confirm recessions. Yeah, so unemployment will lag heavily. The word recession is super overrated, by the way, guys. By the time you hear the word, like the recession is actually in, you've already done 70% of the damage most of the time. DJ AJ says, Tom, what are your thoughts on the US 3-month 10-year? Well, not much, because the 3-month is just going to continue going up and then eventually invert. I mean, I don't give many guarantees. I think it's guaranteed almost that it's going to invert. No, I'll never say never. But at the moment, the 3-month is obviously the 3-month forward yield. So we already know that we should be at 3.26 or whatever by the end of the year, percentage in the US. Therefore, it's going to invert versus the 10-year. So we actually should see on my favorite recession indicator, 50% of all yield curves inverting, which basically just means, well, it's never been wrong to call a recession. Does it help us? If it happens early and we don't have a pullback in the market, hey, I'm never going to doubt it. I'm always going to position around it. And I still think, again, it'll be correct this time around. Jason says, we already pulled back. Absolutely. Thank you to the 1,300 people here, by the way. Appreciate each and every one of you. Let me have a look and see how we're going. If you haven't subscribed, consider helping us out. Considering helping the community out here, guys. 99,847. I mean, this is if you can unsubscribe next week, all right? You can unsubscribe next week. But if you want to help us out for now, click that button. I'm sure someone out there hasn't clicked it. Do it, guys. Come on. T-Doc. Ooh, where's T-Doc going? Pretty low. So yeah, by the time you hear the recession or the recession's confirmed or anything, then usually it's all over. People feeling FOMO. The more FOMO you feel, the worse it feels. Usually just around the corner, there is a pullback. That's generally the process. 2020, we had a very unique time. So that is that we didn't really see many pullbacks. I actually wanted to study it with you guys. So let's have a look at the SPX here, 2020. Very different pullback kind of period. Now, a lot of markets just go off and it's off. And of course, you've got to ask yourself, what are you trying to achieve here? Are you trying to achieve a 10-year plan, a 2-year plan, a 6-month plan, or just trading? If you're just trading, why do you care? Abundance mindset, guys. Over here, however, you'll notice that the pullbacks were not that significant. And what actually happened was most of the bigger investors got left dead in the water. They couldn't buy the dip like retail could. Retail didn't know what the fear was. So they were like, yeah, let's buy Apple, let's buy Amazon, let's buy Google. And it worked out for them. This was one of the pullbacks, and that was really all you got, which was still a decent amount of percent. But this happened in that June period. This was a pretty big unloading of shorts by the street. And then we saw that kind of better. This was where they really positioned themselves. And then, of course, we saw it move up. So this time around, if you look at a lot of pullback, a lot of previous history, sometimes you just don't get the chance. It just keeps going. And you're like left going, scratching your head saying, what is going on? And in these situations, you've got to play, and this is why I wanted to bring it up, your risk versus reward scenarios. If you're an investor and not a trader, and I know most of us are traders, but you've got to play this. Think of it this way. If you are here and your upside is to the top 31% plus, the unlimited potential upside, your downside, let's say, is 3,200. What makes the better statistical odds? That you think it's going to 3,200 and you would have bought there otherwise? Or you've got 31% upside and potentially another further 12% downside, possibly to get to PE ratios that would make you incredibly excited. And at that point, you've got to say, okay, this is where that dollar cost average concept comes in for a lot of people. Now, I'm not saying that we've based fully or anything. Again, we don't know that. We're going to follow the price action. But for a long-term investor, always think, what's my downside risk in my opinion? What's my upside? And once you know both those and you work them out as a ratio, if you're getting like a 3-to-1, might be worth thinking about. Investing swing day trading says market did get very oversold by mid-June. Absolutely. Look at this. Guys, that's why I crapped on about it. We had an island down here. Look at the island. It was a beautiful island. It was Hawaii with the best waves. And there was our island. It was a great one. And then all of a sudden just went bang. And at that point, this is ridiculous. And I've argued that for a while. I've argued this ever since we came down here. This is fast, and ridiculous inefficiencies. Basically, it was just skipping price. There were orders and things just sitting here and nothing got touched. So then we got the first one, and now, of course, we've got the second one. Michael says, I think NAS is a leading indicator for BTC. Yeah, a lot of people think Bitcoin leads the Nasdaq. I'm here to tell you, I don't believe Bitcoin or crypto leads anything. It would be the others, the big markets of the world, leading risk on, risk off. Basically, crypto is this. It is really greed and fear in its truest form. That's what I believe it is. Bitcoin, I love Bitcoin, don't get me wrong. I don't actually really get how you would use it anymore, but I do find Bitcoin and Ethereum my two favorites. And you know what? I'm not going to pretend I know much about these other coins. I don't even know what Matic really does. I don't even know why I have it there anymore. In fact, get out of here, Matic. I keep the IOTX there. IOTX will stay there, but we won't be having no Matic anymore. I don't even know what it does. So from that, I just look at charts, and that's all I care about with these. But look, Bitcoin, it's got that 24/6. It's pulling back here. Obviously, we're looking for turnaround stories. It's actually been acting okay technically. It's been breaching, kind of making nice lows and taking them out. And then when it takes out those orders, it seems to be rallying, which has been nice to see. It's been fairly consistent at that strategy or that pattern, which has been quite good. And here you've got like this little inverse head and shoulders kind of forming. So you could see a little bit of weakness here on Bitcoin. Again, Nasdaq turns around, Bitcoin will probably turn with it at the same time. That's how I would look at it. They're not correlated fully. I think it's about 0.3 something or about 0.3 something. So that's my thought process there. And in terms of longer term concepts on Bitcoin, I think the rainbow chart kind of says it all. It's not my opinion. It's the opinion of the rainbow chart. It says it's here. So the rainbow chart has been pretty okay for a while. It's again not a trading level. Yeah, it's more of a, do you have a plan based on this? Do you have some kind of idea? Jacob Johnson says scaling into. Jacob's on top of things, guys. I'm reading a few of his comments here that are coming through. He seems to be on top. So another one you could check out is halving tracker. So everyone else seems to have forgotten about halving. I'll show you what I think. I think it's working perfect, frankly. Halving tracker seems good to me. Maybe you should give them some love for posting their halving tracker concepts every single day now and getting no love anymore. They were growing at one point. But the halving tracker, let's have a look here. So we've got always ignore prices. Okay. This stupid. Get out of here. This stupid thing. So, all right, that's stupid. Let's remove that. There we go. We fixed the chart. And what we have here is a bottoming similar to 12. And in fact, we've followed a kind of, I wouldn't say absolute, but kind of similar highs here and secondary highs as 12. 12 is very similar in many ways. So if that's true, then we have a bottoming process here for Bitcoin, or we go into like that kind of 216 where we end up getting that low. And I've always looked at this between kind of that 850, 875 and 1,000. And I've just gone, you know what? That's when everyone's going to hate crypto the most, because it's in between cycles. The initial hype and FOMO's run off, and we don't have that ramp into the new one yet where people start talking about it again. So yeah, I like that level. Just thought processes. You guys make your own decisions. It's just based purely on my opinion. Okay, don't go do anything with that. All right. Looks like we've got a super chat coming in. We'll answer it. Bradley B, thank you very much, Brad. Going to close a house and miss the stream. Did you cover Euro USD? We did. We're at the resistance, obviously looking for DXY to further weaken here. Euro is contending with that resistance. So until it breaks out, you can't really be loving it. But yeah, I like what we've seen so far. I'd like to see DXY just weakened heavily actually then during the stream. Let's have a quick look here. Before we get back, I don't want to check the DXY. I do like the currencies at the moment, guys. I just think it's been easier trading there. Yeah. Okay. So we need a new low. That's going to be very big for the euro. Should see the euro pop. Thank you very much. Congrats on closing the house. That's always cool. Get those sweet commission. In America, I may have become a real estate agent. Those commissions are crazy. I watched some show and I was like, what? What do you mean they got paid $35,000 to close like $1 million house or something? I was like, damn, American real estate's wild. But from my understanding, I think the American real estate, you pay for the real estate agent has to advertise the house. Is that correct, guys? Tom, any thoughts on any of these others? No worries, Dieska. Good luck. Here we go. We're coming into the market. Let's get the two screens up. We'll go with over here. We'll use this one. Again, IWM doing pretty well. We'll go a dual screen and we'll bring up US 500 versus NAS. I think we'll watch both of those into the open. We'll bring up the 1 minute charts as we usually do. Little turnaround here on the actual charts of the 1 minute. Whether that's enough, probably not. What I'd be looking for here is just structure basically forming. And ideally, it makes a new low and then it breaches that structure. Let's go over here, US 500. We'll use ES futures for everyone that trades the ES futures. For anyone that doesn't, it's the same as US 500. Don't worry, guys. Very, very similar. So for our kind of market action here, playing kind of the concept of weakness here in the morning, ideally poking its head into the 4080 zone, maybe down in this area, possibly into 4070, somewhere in here being the order blocks previously or some buyers that might come back in. That level being where we'd like to see the turnaround. We're creating a little bit of structure. It looks like here on both timeframes, on both the NAS and the US 500. We'll have a look at the actual stocks in 5 minutes when the market opens. But this is the current lie of the land. So it's weak. No sign of turn just yet. And that usually means you need to structure a little bit up here because it's kind of gone bleh. Thank you again for the support. Almost 1,400 of you guys here. Smash that like button if you do enjoy the content. We appreciate that. Thank you very much, Monica. Thoughts on Activision? I haven't looked at the charts on Activision, but I like Microsoft very much. Microsoft's my favorite company in the stock market. I do enjoy a good monopoly. It's like, in Monopoly, I don't know if this is correct. Well, actually, I already made my own strategy in it, but you know what I never do? I never buy Mayfair, guys. I always buy the yellows and the oranges and the reds. Always sell the greens. Sell the greens to everybody. Make them pay dearly for the greens. I don't know why anyone wants the greens. They lose. You always lose in Monopoly with the greens. Adam O'Dwyer, $20. Thank you very much, Adam. Says, can you give examples of day trades you would make now and then, especially for Tesla? Oh, we haven't done Tesla, have we? Yeah, I can give you an example. Do you need Tesla or do you need some of the others? I can give you one I did on the euro. It's the same kind of strategy that I would have used on a Tesla or something. Here we go. 3 minutes in. Adam, I may just, if it's okay with you, hold off for a few minutes. I won't forget you. $20, a lot of money, man. So we'll give you the answer very soon. But we'll let this market open. Then 5 minutes after, we'll come back. So call it tabled for now. I'm going to write it down. I'll use my phone. Answer the question. Okay, here we go. I've written it down here. Answer example. Sure. I'll show you an example. All right. LCID daily looks super bullish, mate. I'm sure it does. Those stocks always look pretty damn hot when it's going rally. It's like those stocks terrify me because I never know how to create. Look, here's the thing, guys. Whatever you do, a lot of people like to chase percentage. Personally, I want to chase replication. Okay, so I used to chase percentage as well. I know what it feels like. You want to chase that sweet percentage, but I like to chase replication, and always come from this. Please, if anything we can do on this channel now that we're approaching 100K, please come into markets with an abundance mindset. See if that switches the game. Okay, I sometimes call it aha moments. To me, it was abundance. Guess what? Think about how many trades you saw last week that could have been good and you didn't take a lot of them. Then there's that one that sometimes you go, oh, I should have bought Tesla at $400. I'm an idiot. And you get really angry and you do stupid things. Okay. Abundance. There's another opportunity. Do not worry. 1 minute till the open here. Just for anyone that's joining us, we've got that 40 kind of 85-ish, 80, 70 kind of zone. We're looking for those potential down here. We're structuring a little bit early. If we do end up just forcing the structure down, so we go like structure quickly, make a low, then bounce, that could mean actually further rally for the day. That's the kind of thing that, you know, traders would be doing there. They'd be saying, okay, cool, we structured up. We're weakened in the morning. If you're feeling super bearish, you're going to want to see 40-70 cleared down. Earth Creature says, Aptera, the Tesla killer. You know what all these Tesla killer companies remind me of? They all remind me of, like, you ever play World of Warcraft? Every MMO was a wow killer. That's what they said. Wow killer. And then nothing killed it. Here we go. We're live, guys. Let's scroll through some of these stocks. So we've opened up mostly red across the board here. Beam down 8.7%. By the way, if you want to see whether there's FOMO in the market, I know there's news around it, but Enphase, have a look at that stock. Wow. So SP 500 weakening, 4102. We've got Nasdaq kind of just sitting around this down. We've got a gap now that's lower. So let's have a look at the SPX viewing against it. So there's that gap that you would now like to see filled at some point. So again, the further you go down, if you then reverse, the more chance you've got of filling that beautiful gap as a nice take profit target. It gives you that kind of opportunity to say, okay, well, at least I know where my aim is going to be. Practice the patience here in the morning. It's Monday. There's always a good amount of traps for retail. People get paid in the US, I believe, mostly on Friday. They sit there, they sleep on it, they review the charts, they found the next Tesla killers, and they're ready to buy them on Monday, and they get slogged. Where's Enphase going? Well, I'll tell you one thing. Enphase is absolutely horrifically long at the moment in terms of where the price has been. I don't like it. I think it's super overbought. But have a look at this. It's a vertical phase. I don't like buying vertical phase. 28.84% off the break. Nice break though. Beautiful break. You don't bet against it necessarily, but it's not something I like to get involved in. I mean, look where it is. The resistance. Right on it. So most markets seem to be down. We'll load up here the Tiger Brokers platform. We'll check out whether we've got the refresh here of all of the stocks. We'll go heat map, I guess. Press 10. Seem to be lagging. Probably should have reset this leading in. Okay, we'll come back over to that. I think it's because I didn't reset it over the weekend. All right. So yeah, still down more, 40.96 futures. So that's coming down a little bit. I think from the lie, you're basically seeing a few of the technology stocks leading. We've got some metals probably down here as well. What else we got? Metals. Let's put X on the chart here for a second. Let's look at steel. So steel's been pretty nice recently. Nice recovery in steel. For anyone that got copper, steel, those other ones, they all usually move together. So that was a pretty good spot if you got that recently. Copper was a good inkling into steel, into aluminium, into other metals that got hit. And look how much they got hit. A lot of people don't look at the other sections of the market outside of tech. 56%. 56%. So we got asked a question from Adam. He asked a question about trades and looking at them. So I'll have a look at Tesla just so I can bring it up for the analysis. So Tesla obviously doing incredibly well. So there's different trade styles and they depend on your stop losses and things. So for like a Tesla for me, the way that I would have done it, well, basically I had a trap like this. So a trade that you could have taken, should you have been wanting to, was realistically probably out of the gates here off the earnings. It came out strong. There's one thing about Tesla traders, and you've broken a triple resistance and you've broken a symmetrical. So at that point, Tesla traders, they go ballistic. So that would have been that kind of nice slingshot day trade where you've already seen a lot of things, higher lows, higher lows, higher lows, higher lows. Remember, read the chart. The chart's telling you that already there was something bullish going on, and then we know Tesla FOMO is going to come in. So this is more of a day trade should you be wanting a breakout that makes sense, okay? The one that I prefer, though, is often these types of positions. Actually, you could use the DXY as an example, but we'll use the Euro instead. We'll use Pepperstone here. So the Euro... we'll get rid of this box. The Euro comes down to a key level being this. Okay, we can all see it. Support, very clear support, and it breaches a little bit. All right, and that looks like to a lot of people a short. So what does the market then do? It goes long. Okay, now I've got a lot of information. The market's come down to this level. It looks like it's going short, as in, like, theoretically, that's what people believe. They would have got trapped. And then the market has the news, and then I expect it to pull back after that trap. After it took out this area, this zone here becomes a very interesting zone for me to potentially look at the buy after the news, okay? And yes, I'm very patient, and I wait for statistical chances. So at this point, what do we know? We've taken out the lows and it looks like a short. We then rallied heavily through the news, which we've then pulled back on, which traps all these people. It's like maximum extraction, techniques. So I want to focus in on this area. And that's really what you're looking for at that point. So how do you focus in on this area? Well, you go down into it and you have a look at the price action. If you don't believe me, again, you can join the free 7-day trial and have a look at the community. It's something we discussed. So at this point, you're looking for this type of turn. And when that turn happens at this area that you already expect it to happen in, becomes very, very nice trade. So it's about bringing together what I call multi-time frame analysis. together with traps. And yes, it's a very time consuming. It's not. I'm not saying markets are easy. It's just what I do. Multi-time frame into traps, into then analyzing a boxed area that then I trade off. Okay. And that's truly what I do. Now, does that mean that you can always trade Tesla? No, it means that I usually like to have a little bit different pairs. So you might have Tesla in there, but generally you're doing this on a few currencies. You're doing it on SPY, my personal favorite. I do love the SPY, and Dow and gold as well. So all these types of ones. Okay. So you're really looking for bringing together multiple areas and having the ultimate patience. Not easy to do, but you get crazy risk rewards. And again, you can go check that out if you want to. All right, let's have a look at this market. Is it recovering? Is it falling? What's it doing? Someone in the room can thank you very much for the donation again. So here we've made a new low and we've come up and tested that area again. So tested this little resistance high. Scroll into maybe a 1 minute chart here. You can kind of see that's now the area that you're contending with here, at least early. So I don't mind to see a breach of this, and then probably that for some people might be a little thing. I mean, it's not super strong, but it's certainly a little thing. Do we have OPEC this week? It's a great question. Let's just quickly load up here a few of the things that we've got. So we've got non-farm employment change. Obviously, we're seeing the big announcement from the Fed coming through, or not the Fed, the employment change. That'll be a big one. Then we have a bunch of other central banks, and we've got a little bit of news. So if we scroll over here and we go to, we're going too far back. ISM manufacturing PMI, that's coming out very soon for the US. So that's 10 a.m. New York time. Then tomorrow for Australia, for me, we have the cash rate for any Australians coming out there. I guess that's going to go up. I don't know why it doesn't have a forecast, but probably will. I don't know. JOLTS job openings. Then we have, scroll down, ISM services PMI, 10 a.m. And then the pound, and obviously the big one. Be a little bit careful taking day trades into the Friday, guys. This is how I would explain non-farm payrolls to someone is this. Cool, we've done it. That's non-farm payrolls in a nutshell. But also you could explain it like this. Woohoo! Oh, God. Or, oh, no. Woohoo! That way. Kind of the opposite, yeah? First initial reaction to non-farms. How many people? We've done a lot of live streams on non-farms here on the channel where we used to run 5 days a week. And it was always like this. One way, everyone goes psycho in the chat. And then I'm like, nah, guys, it's going to go reverse. You watch. And they're like, but I see the number. I'm like, no, don't even try to interpret the number. You won't have any idea what's going on. And then it goes the opposite way. So I like to call non-farms the ultimate Trapapalooza, crazed fest. So yeah, that's really what's happening there. First move's the fake move. That's right, Gary. Absolutely. Yeah, I probably did get a little bit. Yeah, I got a little bit owned there. So the markets here have opened up, down. They've obviously gapped, which is the most important concept. Should you be a day trader? We're seeing a little bit of stabilization here early, putting the pressure on this very small level we have early here on the session. And we have the gap, which is, what was the gap now percentage wise? So the gap here is 0.5%. So that's a little breakout there. Can we move all the way to fill the gap? I don't know. That's obviously the sell down we got in the morning. That's the new low that happened. And now there's a little bit of ramp. Oh, we got to ban some people here. 1 second. Thank you very much. Get out of here, you sneaky bots. By the way, please, if you see these horrendous spammers, guys, two channel announcements I need to make. First announcement, please. I do not have a WhatsApp that I will ever contact you on. Do not click that crap. Oh my goodness, it's bad. It's all over Twitter. It's horrible. Lots of content creators have had problems. Also, if you can help me out, there's so many spammers on YouTube. I don't know why YouTube won't fix it. So realistically, if you do see it, just click the little report spam button on it, please. It does help out. But I do not invest in random cryptos. I do not have a fund that I offer to other people. So do not think that is a thing. It's all dodge. Don't click it. It's just so many spammers. I guess they're successful. That's a nice ramp there off that break. Thank you very much, Sick XJ. Boeing going Boeing, says Kunal. Let's have a look at Boeing. BA. Oh, 4.89%. Look at Boeing go. We didn't even look at the earnings calendar for the week yet. So Boeing cleaning up another one of its gaps that are left behind. Nice base, actually, on Boeing. I'm not even sure if this stock should... I mean, if you actually zoom it out, you'll see how horrible this stock got. It got really bad. It went all the way back to May 2020, which actually was the same price. Get this, 2013. Wow. 2013. That stock sucks if you got the wrong price. Tesla on fire. Yeah, 3.4%. Very nice. So Tesla is, on some fire. The Tesla killers aren't killing it today. Probably should have spent a little bit more time on this. I doubt I would have given you much in terms of TA. Frankly, not really. We got past the gap and we just keep going. At this point, Tesla's open to similar issues that we had last time. Maybe it's a good gauge of the FOMO coming back into markets and good traps. So here's the trend line a lot of people have started sending me. How much did Tesla put on over this time? Let's do a quick measurement here. So down to top, 50%. Ooh, that's pretty cool. So if we go to here from bottom to top, it's actually almost 50%. It's a lot of money this stock puts on, doesn't it? Puts it on quick. So 3.46 leading into the resistances of probably that 9 kind of 44. So you're getting pretty close to that now. Yeah, pretty cool. Not too bad, not too bad. Market's starting to turn to the bull a little bit here. I mean, obviously we saw that on that little time frame. We kind of played that little concept out. And I hope it does keep continuing. There is no reason yet, I repeat, I don't know when it's going to turn, but I would suspect it will. Silver regained $20. Yeah, silver's doing good. What's that dollar index doing? Down 0.35%. US oil just getting pummeled to remind people. It's a little turn. To remind people that just now, US oil just put in a low past this low. And this is just such a contentious zone. I don't even want to trade that. I mean, I've said it for a little while here. I'm scared of this level without options. I mean, that's my opinion. It's just, that's a nightmare. I look at that, almost go blind. Adrian says, what about China like FXI? So let's have a look at what FXI is. Oh, it's a large cap index. Okay, fair enough. Is there better reward ratios in the SPY? It's still under March 2020 values. Yeah, okay. So, look, I once invested in China okayly. I used to buy what I call new. So I basically would target the middle class companies that were part of the middle class kind of creation of that. My biggest problem is probably the large caps. I don't really trust the large caps here. I feel like every time you get too big, they're kind of like, no. Yeah, come on, guys. A bit big. You're a bit big. Okay? Bit big. Too big. We're going to stop you from being a little bit too much. You got to kind of, slow down there. Slow down. Maybe we'll split you. Things like that. So for me, this is a bit of an issue. And I don't, it's not uninvestable, but I don't know how to invest in it. India is actually a heavily underrated market. India's been pretty good. People don't, I mean, obviously the Indians out there probably know how good the market's been. It's been very good. That's been one of the best markets. And also Vietnam's been pretty strong. Yeah. But this one, look, I just don't know. And the problem is, if I don't know, I don't have confidence. And if I don't have confidence, I can't hold. India's the Nifty. Yeah. Clive says here, oil will stay under till midterm elections. Yeah, oil contracts are trading at like 80 something dollars in December. So they're already well down on where it is now. Block seems to have broken out, but earnings too close to the fourth. Yeah, so Block or Square or whatever you want to call it, a lot of these hypers, while they've recovered good, what looks like percentages, I think we need to, let's pump the brakes here a little bit. Everyone's FOMOing like it's, so insane. Let's just put some of these stocks in perspective, especially the hypers. This stock is still down from its top 73.49%. Now, admittedly, as soon as they purchased Afterpay, I was like, no more Block. Stupid stock. I don't know what they were thinking. They were mad. They went crazy and they bought Afterpay. Good madness. Absolute madness. But anyway, they did it. And this stock is still probably even to here got an 84% run on it. I don't know if this is turning. I'm not even going to try to predict it. I think right now the safest concept to play is huge caps and you're always focusing on your trading on SPY and Dow and Nasdaq and other cool things. I can't even figure out which one of these is going to go first and how much they're going to go by. You're probably better off just realistically, you have to understand the business, the X factor. The TA alone is not going to save you here. I don't even know how technical this chart is. What are your thoughts on Ferrari's strategy yesterday? Don't talk to me about it. That was disgraceful. If anyone's watching the F1, it's the worst race. They are so insanely stupid, so bad. Like, I know most people that don't watch F1 don't know, but they basically think about it this way. Every single race, if it is possible for them to stuff up the win, they will do so by going into pits and putting like ridiculous strategies together. And they are possibly the worst run team I've ever seen. Calm down. No, it's bad. If you follow F1 and you even want Ferrari to win, yesterday was bad. Bad. What do you think about palladium? I don't know. I guess it would be better. It would be a play along with the other metals. I like kind of sticking in the wheelhouse of gold. Sometimes palladium contract is really big. I can't remember if this one's huge, but you just be careful when you go outside of gold contracts. If you used a gold contract, maybe use a demo on your broker before you press the button on silver. The contract can be a lot bigger. Anyone ever fallen into that trap here? Press the button on like a silver or a copper contract. It's been huge, and there's like you've got like a 400. I did it once. I got a $400 brokerage bill on pressing silver once on the same contract. It was so big. So don't make that mistake, guys. Palladium also may be big. I can't remember. You need to make sure you're on the standardized contracts. At this stage, you would say it's basing, and it looks fairly strong. Dry Earth Creature. I see your SoFi thing that you keep doing. I'll give you some love on your SoFi. Not that I actually know much about it. Again, I've never been a fan of this. You can see I just TA'd. Must have been like a channel from before, a long time ago. Look, here's my problem with a stock like this. It came in. Did it come in as a SPAC? I can't remember if it came in as a SPAC or it was just worth $10. We don't have any history. Now, I have a rule, and that is if it hasn't been on the stock market for 5 years, generally I will not trade or invest in it personally. Okay. Or if I do, it's more like gamble on money. And the main reason I do this is because I've seen so many fail. And that's the issue. With something like SoFi, I know everyone loves it so much or something, but it doesn't seem to represent love down here. TA wise, you would say it's kind of resistances and supports previously. These are the extreme lows, and it's sitting on a fairly nice level. Oil's tanking. Yep. Oil is still the same as it was before. Yeah, and the markets actually have done incredibly well. So that little breakout that we saw before is nice. We almost filled the gap. We've filled the gap for sure in the Nasdaq trade. So yeah, congrats, I guess. Oh, absolutely, Ben. Absolutely. Earth Creature says, aha, you can't see why. I understand. Good luck out there. Bye. So you're gone now, Earth Creature. This is why you don't give the love. Dude, you've been trading a stock that's worth $6. You probably traded it down from like 20, 30 bucks. And that's the problem. Like, you love that stock too much. Don't be blinded by the love. Like, you can't keep putting money after bad after good unless you have strong conviction. If you do, congrats, good luck. But it is what it is. Like, if it hasn't performed, and do you want to leave your money in something that doesn't perform for 12 months to 18 months? If you have that conviction, very good. If you don't, it's not trading, it's investing. Big difference. Eugene says, Tom, do you recommend entering a position during pre-market or when the market opens? That can actually be different. I think that, like say SPY trading here, the way you would look at it is generally you would go, where's your structure? So around 7 a.m. to 11 a.m. EST, so New York time, would be a very good time. Dan says, so when's the big SPY drop? We talked about the start. I'd probably go back over that. William says, fall in love with the balance sheet. I fall in love with price. Yeah, monopolies is good. I like monopolies too. Is SoFi a massive monopoly? I don't know yet. I know Microsoft is. Actually, what you should fall in love with is just, moats. If you're going to invest, you invest in moats. Is SoFi a moat? Hey, I don't know. John says pre-market is tough because of whipsaws in the open. Yeah, pre-market sometimes, I would say 10% of the time is enterable pre-market, but you have to have already existing nice movement from the previous ones. I don't have very interesting stocks in Olivia in terms of long term. I mean, I just have more of the standards that people already think. I don't really think outside the box. I wouldn't say I'm like the greatest stock particular picker in the world. So I pick sectors and I pick concepts. And that's what I'm good at. Picking stocks, picking sectors, picking concepts, and picking timings. But I would go with Microsoft, Microsoft, Amazon, probably Google, but Google less so since TikTok ruined Google a little bit. And certainly I don't care for social medias generally. Apple's always very strong, but it's pretty expensive. But I think that when Apple moves into, let's say they do the car idea, they could make really good money off it. Akash, thank you very much. $5. Check out BA Baba Neo. Thank you for your great work. BA. Well, we already looked at this one. It was just basically a gap up and it filled a previous gap. I could see it weakening and profit taking to occur there. Let's have a look at Baba. bar just sitting on these lows. Hey, so I mean, this is just, I don't know. I don't like this stock. It seems to always be the favorite whipping stock in the US market. I mean, sorry, in the Chinese market at the moment. So look, it's down. I don't know if it's even had its day, frankly. But from a TA perspective, look, you're in accumulation. Volume's still relatively high and it's sitting right in there. I would be surprised if this wasn't basically around the lows. Do you think there's any chance that TikTok could be banned in the US? Only if it breaches some kind of real big privacy and I doubt it. People would get pissed off. A lot of people really like TikTok. Neo. Yeah, that looks a lot better. So that's a decent base. You've got a max pain. Obviously, you've got a resistance and you've currently got a downward channel. So looking for that breach out of that to get to your 24. That doesn't look too bad. Not too bad. Barbie maybe delisted from the New York Stock Exchange. Yeah, there's all sorts of risks there. The Neo is interesting. Let's have a look at the 1 hour here. Again, I'm not too keen during these types of market conditions to do too many technicals on individual stocks. I think still the best strategy is the NAS, the SPY, the Dow, those types of ones. It's just so replicatable, which is really important. It's a nice breakout that you've got here, like getting through that trend line and things like that. Not too bad. Some positive signs in the US market, though. Of course, Amazon, the way it looks, I still would like that to gap down, but that's very basy, big accumulation. I mean, that looks, it does have this hallmarks of a base. I mean, look at that volume, big volume, really decent, like little bit of spike up there. It's fairly consistent through that first initial into that split. We've had now the earnings. We're obviously at the resistance, so it's just hovering there, potential turnover. Google here, just kind of making its way back up to the resistance again. It looks like accumulation at this point. What if you do this? Then suddenly it becomes the trap. So you've got to be very careful about what your plan is, either trade or investment difference. And Apple's just doing its own thing. I've got that targeting on that 165, 166. That's pretty good morning, guys. I mean, if you were looking for your gap fills and stuff, you've basically got it. It looks like nice switches. And they all happened off that little bit of structure you saw. So I think this one just probably tapped. Yeah, it looked like it tapped the close. Let's have a look here. So, yep, it absolutely did. It's done. It's cooked in terms of, well done if you had that type of thing. Very cool. All right, guys, we will probably finish up there. Thank you so much for the support on the channel. I really appreciate it. Let's have a look here at Shop. Yeah, 35. Few people mentioning this. Yeah, Shop is certainly a decent pick. And you can tell here, again, the American consumer is going to be potentially relatively weak here. But look at that channel. My goodness, it's a big channel. And I think I was talking with someone in the private community about this. We were discussing whether it could take these lows. So whether it could do like this. That would be something I'm certainly still considering. Huge accumulation still occurring here on Shop. And you can see why. It's priced, more affordably because of the split. It is a decent stock and it's sitting at those kind of I mean, the business grew, so it's not like you've got to ask yourself the question: Is the business better than it was over here? Yeah, I would say it is. It's just whether the American consumer is too sick or not. Good way to see the American consumer in general is XLY versus XLP. This shows us basically consumer discretionary versus staples. It shows us the rotation of how the market feels about the market, and at this stage, it's the most positive sign that we've seen. Double bottoming, obviously looking better. So if you think the bottom's in, maybe you do want to buy that dip. There's negatives, there's positives, there's always very tough. Really, the only way to do it is to buy companies that you like owning. And I think Warren Buffett's advice is maybe one of the best concepts, not my advice again. He always says, if you buy a stock like that guy before that loves the SoFi, would you be comfortable in holding it for 10 years if the market closed tomorrow? And I can tell you, with many of the big US stocks, if you had an Amazon, or if you had a Microsoft, or you had a Google or an Apple, I can tell you I would sleep like a baby. Why? Because, yeah, it's pretty damn good. I'd probably want a little diversification. I couldn't just have one of those stocks and feel good about myself, maybe Microsoft. But realistically, yeah, the market could close on those. I'd feel cool. If the market closed on DKNG, I'd probably freak out. If I had all my money stuck in that thing, I would freak out. That's just completely frank and honest. All right. Thanks so much. By the way, if anyone's interested, we do have a sale at the moment on a bunch of our courses. Thank you so much for getting us to 100K. Links in the description down below. If you want a free cheat sheet, there is a cheat sheet in the little click button. And I hope everyone's had a good start to the week. We're starting to see this real FOMO coming through. Remember, we got that little bit of a drop in the morning. The market keeps loving its little rallies. Maybe you get a new high. I would rather this just goes vertical now. The more vertical, the better it is. And then we see that kind of switch off later on. So thanks so much. If you're interested in the sale, limited time, obviously down there. We're almost at 100K. I'll give you guys an update. We are at, refresh here. We didn't get that many today. Nah, 861. It's because you guys, YouTube doesn't push the live stream much. It's just subscribers here most of the time. So yeah, I really appreciate it. And that's why we keep doing it. Ciao. Have a great day. Bye.